and welcome to today's video, which is called What's This Turn? It's that something is going on in equities, cryptos, and of course there is quite a move within precious metals too. I have been already referring to that yesterday. Thank you for liking these videos and subscribing to the channel. There is much coverage going on daily. You know what I do for clients on my site. Let's dive right away into cryptos and how it is looking pre-market. I won't be bringing up the MicroStrategy strategy coin charts, but they had been hinting at something going on already yesterday, and you see those lower knots, which is quite a message in itself. And check out slow stochastics or other oscillators, how these are doing at the moment. So, point evidence number one. Moving on to yields. After the long descent retreat in yields, we had seen them turn up yesterday and globally. What does it have to do with data? Still underwhelming index of economic surprises. However, we are going to be meeting not just conflicting tariff news about whether the tariff wars are kicking in or some premature trial balloons had been floated, as you can see described within the inscription, but the focus is on Europe's decision to rearm and to let the deficit spending run quite rampant. US dollar is thus pointing lower because all this deficit spending is lifting up European stocks, and US is no longer the only game in town. As you can see, if you look at the DAX or other European indices charts. Yeah, is there any danger? Not really. It's orderly appreciating, and those Japanese government bond yields are not running rampant. So we have to deal with a long underwhelming series of poor US data starting from the prior Friday, which is quite many days in a row, and today we will be treated to a fresh set of services PMI and other ISM numbers. I've been featuring in yesterday's presentation. Thanks again for liking it. As well, this one, it helps greatly. See this upturn in gold and ask yourself whether in current macro environment it's going to be multiplied by silver somewhat, this correction cut short, or what's the path ahead? Would you be afraid of the upper knot in gold yesterday or not really? What does it portend? Same goes for crude oil, where trading signals clients had been on the right side of market moves as well. I had been calling for the orderly grind lower. It had been partially bought, but are we seeing a genuine change in trend? See the volume, see the indicators, and the answer is there as much as there is fundamentally the answer. A couple of tweet reminders where I had been pointing out in Saturday's presentation the advantages of cleaning up house as fast as possible and starting to rebuild the economy on a new basis with significantly streamlined federal expenses, aiming to seek the budgetary deficit. So, amid the barrage of yesterday's of prior poor data at the onset of this week, we had seen quite a stabilization, and it had been working out intraday the way I had been projecting that. And after this tweet, we had seen one more flush, then a recovery, and stocks are meandering around the latest range, closer to the bottom part, but today's data are awaiting, and I had already yesterday communicated to clients what I see as the most likely, in other words, base scenario of mine for today's session. One more reminder, if you are subscribed on my site, at least for free, within the opening part of the analysis, I started it by saying that European stocks would do relatively quite well in this climate, and check out the DAX chart. After the Canadian response and US fresh counter response promise, DAX had taken it on the chin, but look how fast it recouped yesterday's setback in today's pre-market, because deficit spending, and that has consequences for global liquidity. So the question is, when would Fed follow the path of easing as well? Moving on to S&P 500, steady deterioration in breadth. However, downside had been rejected, same for upside. What does this candle smack of? How close is capitulation? Is it oversold enough? Is the fear extreme enough? What can we expect following the breakdown of the rising trend line that had started in October 2023? These are all the questions and answers that I'm sharing with premium clients on a daily basis, with intraday updates as well. On my Twitter feed, I have featured the QQQ to SPY ratio, and it had been hinting at something, and this is shown in yesterday's sectoral overview, where tech kind of stands apart. Discretionaries, not so, because all the cuts are having an effect on consumer confidence, and those data have not been stellar lately. So, ADP employment change rate ahead, and PMI services and other ISM data components are dead ahead. My joint page to help you select what's right for you based on what and how you trade. I can't stress enough the importance of having full access to my daily analytics and intraday thoughts within the premium channel. Obligatory disclaimer, and let's talk soon again.